Ladies and gentlemen, when the ground beneath you starts to tremble, do you stare at the cracks, or do you lean into the quake and build with the broken pieces? Today we are standing not at the edge of a market cycle, but at the threshold of a seismic tectonic shift in the silver market, a phase so powerful it will shatter every forecast, every misconception, every comfort zone. And if you came here looking for another safe forecast, you came to the wrong speech. This moment, this era, is not about being right. It's about being brave, not about conforming, but about defying. Let me show you why the next wave of silver is not a rise. It's a rupture break. Through is not a moment. It is a mindset. Most people wait for the economy to turn, for prices to align, for charts to look safe. They wait for permission from the market before they take action. But here's the truth. The market doesn't hand out permission slips. It rewards courage wrapped in clarity. It rewards those who step forward when others are frozen, those who see the opportunity in the chaos, and those who understand that the greatest gains don't come when everything looks certain. They come when certainty is nowhere in sight. Financial reality is a brutal teacher. It doesn't care about your feelings, your dreams, or your excuses. It pays you for one thing: your ability to align your mind with the truth of the moment and act decisively. You see, psychology without grounding in reality is fantasy, and reality without the psychology to adapt is paralysis. The magic, the real magic, happens where they meet. We're in a time where the silver market is not just reflecting numbers, it's reflecting a deeper human shift. The demand for this metal is growing beyond the predictable. Industrial applications surging, green energy commitments intensifying, and monetary uncertainty forcing people back into hard assets. But here's where the psychological breakthrough is required. You cannot simply look at this and say, "I'll wait for the perfect entry." The perfect entry is often the one that feels most uncomfortable. Because comfort is where potential goes to die. The investor who thrives in the next phase is not the one with the most information. It's the one with the most integration. The ability to absorb facts, see patterns, and then have the conviction to move. That conviction doesn't come from hype. It comes from discipline, from study, from being willing to be wrong in the short term to be right in the long term. That's financial reality talking. Breakthrough psychology is about rewiring the way you respond to uncertainty. Most people see a sharp dip and feel fear. Leaders see a sharp dip and feel curiosity. Most see volatility and think danger. Leaders see volatility and think window. This is not motivational talk. This is strategy. The market is a mirror of human behavior, and when you master your own behavior, you master your position in the market. Think about it. Every time a major market move happens, there are two groups. The first group reacts emotionally, sells too late, buys too late, and lives in regret. The second group has prepared mentally, studied the data, and positioned themselves to act when the opportunity opens. The gap between those two groups is not luck. It is mindset fused with market truth. Right now, silver is a case study in this exact intersection. Supply constraints are real. Demand trends are real. Inflation pressures are real. But equally real is the fact that if you enter with the wrong mental framework, you will sabotage yourself before the market ever does. This is why so many miss the biggest waves. They were technically right about the asset but psychologically wrong about themselves. A breakthrough mindset doesn't look for reassurance, it creates it. It doesn't beg for certainty. It builds conviction. When the headlines scream panic, it doesn't flinch, it sharpens focus. This is the level you need to be operating on if you want to not just participate in this next phase, but dominate it. And let me say this plainly, dominance is not about ego, it's about positioning. You position yourself not just by what you buy, but by how you think. You can have the same chart in front of you as the next investor, but if your mind is wired to see risk where others see opportunity, you will act differently. And in markets, different actions produce vastly different results. The reality is, the silver market is stepping into uncharted territory. That means no one has a perfect map, but the ones who will navigate it best are those who have trained themselves to operate without one. They know how to read signals. They know how to adjust mid-course, And they know that the point is not to predict every turn, it's to survive every turn and accelerate when the road opens. This is where financial reality meets break through psychology. It's not about fantasy gains or wild predictions. It's about hard truths and harder discipline. It's about knowing that opportunity lives in the same house as risk, and that most people are too afraid to knock on that door. It's about having the courage to be early, the patience to hold, and the humility to adjust. So, as this next phase begins, remember, the market is not testing your knowledge. It is testing your nerve. It is testing whether you will cling to old mental models or build new ones that match the speed and scale of what's coming. Those who pass that test will not just ride the wave, they will shape it. And when the dust settles, when the headlines finally catch up to what you already knew, when the prices have already made their move, you will look back and realize that the real breakthrough wasn't in the market. It was in you. We are living in a time where people worship abundance but despise the discipline that precedes it. Everyone wants the big win, the massive portfolio, the lifestyle that abundance buys. But very few are willing to develop the agility that makes it possible. They want the fruits before they learn how to climb the tree. They want the destination without the stamina for the journey. In volatile markets, abundance is the reward, but agility is the requirement. You can't play the silver bull market like it's a fixed chessboard. It's a living, breathing battlefield, and the ground shifts under your feet without warning. Those who are rigid, those who insist on holding their positions simply because they're comfortable, are the first to be taken out when the terrain changes. Agility is the ability to pivot without panic, to adapt without losing focus, to move with speed without losing accuracy. Here's the truth. Abundance doesn't go to the strongest or the most educated. It goes to the fastest to respond. The market doesn't pay you for what you know. It pays you for what you do in the moment when everything changes. Think about the nature of silver right now. Industrial demand is exploding from sectors most people ignored 10 years ago. Green energy initiatives are pulling supply faster than it can be replenished. The macroeconomic landscape is unpredictable. Central bank decisions, inflation spikes, geopolitical disruptions, they all influence price in real time. If you're slow to interpret, slow to decide, or slow to act, you're late. And in markets, late is expensive. Agility is not recklessness. It is precision under pressure. It is making decisions at speed without gambling. It is being so prepared in your research, so aware of your risk limits, and so confident in your strategy that you can act instantly when opportunity appears, or when danger emerges. Most investors make the fatal mistake of thinking abundance will give them agility. They think, once I have more capital, I'll be able to move quicker. Wrong. Agility is a habit built in scarcity that becomes a weapon in abundance. If you don't have it now, money will only magnify your hesitation. You'll just be slow with more to lose. In the next phase of this silver bull market, you need to think like a sprinter who's also a strategist. The sprinter because you must move before the rest of the field reacts. The strategist because you must know where you're running and why. This is not about chasing every short-term movement. It's about identifying the structural trends and then maneuvering through the volatility they create. Look at the people who survive market chaos. They are not the ones making the loudest predictions. They are the ones refining their positioning quietly, month after month, move after move. When prices drop, they don't panic sell. They reposition. When prices spike, they don't chase. They secure gains and prepare for the pullback. They are always in motion, but never without reason. Agility also means emotional flexibility. It's not just your portfolio that needs to adapt. It's your thinking. If you're married to an old idea simply because it once worked, you are already losing. Markets change faster than egos can handle. The ones who win are those willing to kill their own favorite ideas when the data proves them wrong. They trade the comfort of being right for the profit of being adaptable. This is why abundance without agility often becomes a curse. People who stumble into a windfall in a rising market without ever learning how to adapt lose it just as fast when conditions change. They never learned how to survive in lean seasons, so their abundance becomes brittle. They think they've made it, but really they've just borrowed time from the market. True wealth, the kind that endures through cycles, is built by people who master agility first. They know when to expand and when to contract, when to go on offense and when to protect their position. They understand that sometimes the smartest move is to move out of the way entirely. And they know that speed is nothing without direction, and direction is nothing without awareness. This is the mentality you need now. The next phase of the silver bull market will not be a straight line upward. It will be a series of surges and retracements, false breakouts and genuine rallies. Those who are rigid will get whipsawed. Those who are agile will ride the waves. Don't get hypnotized by the idea of abundance. Chase the skill of agility instead. Abundance will come as a byproduct, because in every market there are windows that open for a moment and then slam shut. If you're still running your calculations when the opportunity knocks, you'll miss it. If you've trained for agility, you'll already be through the door before most people realize it was open. When the history of this market cycle is written, it won't be the biggest players who come out on top. It will be the fastest learners, the quickest movers, the most adaptable minds. And when abundance finally arrives, it will not surprise them. It will simply be the natural consequence of the agility they've been practicing all along. In every market cycle, there are two types of people: those who move with intention and those who move with the crowd. The first group sets the pace, the second group waits for permission, and by the time the second group acts, the opportunity has already shifted. A leader mindset is not about ego or about being the loudest voice in the room. It's about having clarity when everyone else is drowning in noise. It's about seeing the game for what it is, not for what others say it is. In volatile times, the crowd's reaction is almost always emotional. They sell on fear, they buy on hype, they chase after what's already moved, and they abandon what's about to rise. The leader resists that pull. The leader doesn't panic when prices drop or rush in because someone tweeted a prediction. The leader acts from principle, not from impulse. In the next phase of the silver bull market, this distinction will be the dividing line between those who win and those who bleed. The follower will see a sudden dip and think, "Get out before it gets worse." The leader will ask, "What is the data telling me? What is the story behind this move? Is this a signal to leave or a signal to enter?" The leader knows that the market tests your patience before it rewards your conviction. The follower is addicted to confirmation. They need to hear that others agree with them before they move. The leader is comfortable in the lonely space of acting before consensus. This is where the advantage lies, because by the time the crowd sees what you've seen, the price will have already moved, and the leader will already be positioned. A leader mindset is not recklessness. It's calculated boldness. It's being able to stand still when others are running and move decisively when others freeze. That requires preparation, because you can't lead from ignorance. You lead from insight. Leaders study the macro forces, understand the supply and demand dynamics, watch industrial usage patterns, track global currency trends, and then they connect the dots before the picture is obvious. Follower panic is easy to spot. It's frantic, it's reactive, it's driven by the need to escape discomfort, but markets are built on discomfort. The price of admission to every major opportunity is the ability to sit in uncertainty longer than the masses can tolerate. If you can't do that, you will always be buying late and selling too soon. Leadership in markets is also about emotional discipline. Fear and greed are constant, but a leader refuses to be controlled by them. Instead, they use them as signals. Fear in the market tells a leader that assets may be undervalued. Excessive greed tells a leader that risk is building. In both cases, the leader positions accordingly, not with the herd, but often against it. It's not about contrarianism for the sake of it. It's about understanding the psychological cycles that drive the herd's behavior and positioning yourself where the probabilities are in your favor. The leader doesn't just know the chart, they know the crowd behind the chart. In the silver market, we're going to see moments that shake out weak hands. Price drops that look terrifying in the short term, rallies that tempt people to overextend. The follower will get whipsawed because they're chasing movement, not strategy. The leader will use those same moments to build positions or take profits in a way that strengthens their long-term play. And here's something most won't tell you. Leadership is lonely in the moment, but obvious in hindsight. When you make a move that others don't understand, you'll hear criticism, doubt, even ridicule. But when the market turns and your position is validated, those same voices will call you lucky. It's not luck, it's the discipline to act without needing the crowd to agree with you. A leader mindset also means you accept responsibility. If the move fails, you own it. If it wins, you don't become arrogant. You become even more committed to the process that got you there. The follower avoids responsibility by hiding in the safety of the herd. The leader embraces it because they know the only way to control outcomes is to own decisions fully. The truth is, follower panic is expensive. It costs money, it costs time, and it costs confidence. Every time you let the crowd dictate your moves, you weaken your ability to think for yourself. The leader does the opposite. They sharpen their independent thinking with every decision they make. Over time, that independence compounds, just like capital. The silver bull market will not be kind to the hesitant, the reactionary, or the easily swayed, but it will reward those who lead themselves with clarity, discipline, and courage. You do not need to lead millions. You only need to lead one person, yourself. When you can do that without being swayed by every ripple in the water, you stop being a passenger in the market and start being the one steering the ship. And when this phase is over, and the headlines talk about the surprise winners, it will not surprise you. Because you didn't follow, you led, and that's why you were there before the crowd even knew where to look. Conviction without data is gambling. Data without conviction is paralysis. The real edge in any market comes from marrying the two, digging into the numbers until they are no longer just statistics on a screen, but a living story you can act on with absolute certainty. Most people approach markets with opinions first, evidence later. They decide what they want to believe, then search for the scraps of information that confirm it. That's not research, that's bias wrapped in overconfidence. The serious player flips that process entirely. They start with raw data, strip away their emotions, and let the truth shape their belief. Only then does conviction have a foundation solid enough to withstand volatility. In the silver market, the temptation is to get swept up in the narrative. People hear about a bull run and rush in without asking why it's happening, how sustainable it is, and what the deeper forces are that could either amplify it or kill it overnight. The professional doesn't move until they have clarity. They want to know, how is industrial demand trending? What's the current state of mine production versus recycling output? How are central banks positioning their reserves? What's happening with interest rates, currencies, and inflation in key economies? That's the groundwork. That's the difference between a move and a calculated move. Data drilled into conviction means going beyond the surface-level headlines. When you see a price spike, you ask, was this driven by speculative short covering or by a structural shortage? When you see a sell-off, you dig into whether it's driven by genuine fundamentals or just a knee-jerk reaction to a macro event. Every number tells a story, but you have to be willing to read past the first chapter. The power of this approach is that it kills fear. When you have done the work, when you've interrogated the facts from every angle, you no longer panic when prices drop, because you understand whether the underlying thesis is intact. You don't chase every rally because you know which ones are supported by fundamentals and which ones are just noise. Conviction born from data is also what allows you to hold your position when the crowd loses faith. There will be moments in this bull market where headlines will scream collapse, and everyone will rush for the exit. If your conviction is built on nothing but hope, you'll join them. If it's built on hard evidence, you'll know whether it's time to hold, buy more, or exit strategically. That calm in the storm is what separates the consistent winners from the lucky few. But let's be clear. Data is not just about numbers in a spreadsheet. It's about context. A supply deficit in silver means something different when industrial demand is accelerating versus when it's stagnant. A currency shift matters differently depending on interest rate trajectories. Raw data without interpretation can be as misleading as no data at all. The skill is not just in gathering information, but in understanding its weight, its timing, and its implications. The discipline to work this way is rare because it's not glamorous. It's hours of reading mining reports, studying import/export data, tracking ETF flows, and comparing it to historical price patterns. It's building scenarios for what happens if inflation stays sticky, if geopolitical tensions escalate, or if certain industries ramp up silver consumption beyond projections. Most people would rather skip straight to the prediction. But the prediction without the preparation is just a guess dressed in confidence. Conviction also means accepting when the data changes. The market doesn't care about your thesis. It cares about reality. If the facts evolve in a way that undermines your position, conviction means having the discipline to adjust, not the stubbornness to cling to being right. Strong conviction is not rigidity. It's the ability to stand firm when the evidence supports you and to pivot when it doesn't. In the coming phase of this bull market, there will be waves of noise designed to shake you out of your position or lure you into the wrong one. Data is your filter. It allows you to separate the short-term chaos from the long-term trajectory. It tells you when a dip is a buying opportunity and when it's a warning sign. It keeps you from being the person who sells at the bottom and buys at the top. The reality is that the biggest opportunities are invisible to the untrained eye until after they've passed. By the time the crowd sees them, they're already priced in. But if you've drilled into the data early, you can see the shifts before they appear on the headlines. You can position yourself where the market is going, not where it's been. And when you act from that place, from evidence so solid it has burned away your doubts, your moves are no longer reactions. They are executions. You're not chasing. You're not guessing. You're not praying. You are moving with the precision of someone who knows. And in a market as ruthless as this one, knowing is the only advantage that truly compounds. Fear is the most underutilized asset in the market. Most people treat it like a liability, something to avoid, something to suppress. They see fear as the enemy, but in truth, fear is the most accurate early warning system you will ever have. It's raw. It's instinctive. It's telling you something is at stake. The mistake is in letting fear dictate your decisions instead of directing your focus. When the silver market starts swinging wildly, fear will be everywhere. It will be in the news headlines, in the social media chatter, in the voices of those who sold too soon or bought too late. The masses will hear fear and freeze. The professional hears fear and leans in. Not recklessly, not without calculation, but with the awareness that when fear saturates the market, opportunity is hiding in plain sight. Fear, in its purest form, is energy. Left unmanaged, it drives panic. Channeled correctly, it drives precision. If you can reframe fear from being a stop sign into being a signal, you will see openings that others miss. When everyone is too afraid to buy, that's often when the best value is available. When everyone is too afraid to hold, that's often when the real gains are just ahead. This is not romanticizing risk. This is understanding the psychology of markets. Every major rally in history was preceded by a period of maximum discomfort. Every breakout felt improbable in the moment because the dominant mood was fear. That's the point. Fear clears the field. It shakes out the weak hands, the over-leveraged positions, the distracted investors. It creates a vacuum, and if you are prepared, you can step into that vacuum before it fills again. In the next phase of the silver bull market, fear will not be a one-time event. It will come in waves. Sharp price drops will make people question the entire bull run. Rumors and uncertainty will test your conviction. This is where your preparation matters. If you've done the work, fear doesn't send you running. It confirms that the market is doing what it always does, transferring wealth from the impatient to the disciplined. Most people treat fear as a cue to exit. Leaders treat fear as a cue to investigate. They ask, what is causing this sentiment? Is it justified by the fundamentals, or is it emotional overreaction? Does this create a tactical buying opportunity or signal deeper structural change? Fear, when analyzed, becomes data, and data, when understood, becomes strategy. The irony is that the most dangerous moment in markets is not when everyone is afraid, it's when everyone is comfortable. Comfort breeds complacency. Complacency blinds you to risk. That's why some of the biggest losses happen at the height of optimism. At least with fear, you're alert. You're scanning the horizon. You're making sharper decisions. Fear also reveals your personal weaknesses. It shows you where your knowledge is thin, where your plan is vague, where your risk tolerance is lower than you thought. That's valuable. It means every fearful moment is an invitation to strengthen your approach. Instead of running from the discomfort, study it. Ask yourself why it's there. Are you afraid because the fundamentals have changed, or because you never really understood them in the first place? In volatile times, fear is a filter. It separates those who are in the market because it's fashionable from those who are in it because they understand the game. In the silver market, this separation will be clear. Casual investors will exit on every dip. Disciplined investors will see those dips as an entry point into long-term positions. Over time, this compounding of strategic decisions will create a gap in results so wide it will look like luck to outsiders. But it will be nothing of the sort. The real mastery is not in eliminating fear, it's in keeping it on a leash. Let it alert you, but don't let it control you. Let it heighten your awareness, but not cloud your judgment. If you treat fear as a partner in your decision, making instead of an obstacle, you will find that it sharpens your timing, your analysis, and your execution. This next phase will test everyone's nerve. There will be moments when the market feels like it's collapsing under its own weight, when the price action makes no sense, when the narratives shift by the hour. In those moments, fear will be loud. And that's when you will have a choice: join the panic, or use that energy to take the position others are too paralyzed to see. Because when the dust clears and the headlines change their tune, the gains will already belong to those who understood the true value of fear. Not as a sign to stop, but as the green light they'd been waiting for all along. So here's my charge to you. Don't just ride the wave. Make it. Don't just survive the market. Shape it. You are not spectators in this next bull phase. You are architects. The silver horizon is not a mirage, it's a launch pad. The question is not will it exceed expectations, but rather, are you prepared to be bigger than your expectations? We're not here to predict the future. We are here to own it. Let's go.